Good morning, you magnificent melon heads. I hope you are well. I hope everybody had an excellent extended weekend. I know I did. And it is now time to get back to normal. Stocks were just marginally lower this morning, and it looked like they were threatening to break into positive territory right before the opening bell. So we will see what's going on this morning. Other big news going on, the FEW backwards is getting together in Switzerland to figure out ways to convince us to give up our cars, our meat, and our gas stoves. So I'm sure that's going to go really well, and it's going to be good for us, whatever comes out of that place. But the big news this morning is the Japanese central bank may be on the brink of giving up their seemingly suicidal yield curve control policy that has been running amok in the Japanese bond market, and that could cause big problems in the global bond market. But first, it is time to shrink my big melon of a head, and let's see what's going on at stocks this morning. It looks like the S&P did manage to open just marginally higher, up 2 points or 0.06%. The Dow is still a little bit in the red here, down 56 points or 0.17%. And the NASDAQ is pretty much flat, down now up 1 point, 0.02%. So stocks doing a whole lot of nothing this morning. Let's see what the U.S. dollar is doing. The DXY is at 102.02, down 0.18, threatening to retake that 101 handle. Again, the dollar slide towards 100 continues. In the bond markets right now, it looks like yields are kind of mixed this morning, with the short end of the curve is only up just a fraction of a percent, but the long end is up 1% and change. So we've got a little reduction of the inversion in the yield curve going on right now. The 10-year yield is at 3.54%. Commodities, again, mixed today. We've got precious metals looked slightly lower. Gold still above 1900 at 1917, down 390 today or 0.2%. Silver still above $24 at 24.24, down 13 cents or 0.53% right now. Platinum is also down 11 bucks at 1061. Palladium at 1731, down about 55 bucks. But the story today is oil. We've got crude at 81.23. That's WTI crude, up another dollar or 1.46%. So it looks like the end of the dumping of the SPR and the Chinese reopening right now is more than enough to offset demand destruction for fuel here in the U.S. So oil prices continue to head higher. And check out natural gas this morning at 365, up 6.8%. And just to revisit here, we had started this chart last week on my live stream, and we had talked about how the RSI was just down here in the gutter, hovering around 30. In the last few times we were anywhere near this level in the RSI, we had a pretty sharp V bottom in natural gas futures. So I'm wondering, are we seeing the start of that right now? All right, but the big story today, again, this is the one I want to get to. Bank of Japan could announce major policy shift this week as bond yields top limit again. The Japanese central bank could end its yield curve control policy when it concludes its two-day monetary policy meeting this week. That will be the end of day tomorrow. I'm not sure about the time differentials and what time that would end up for us here in the States. But this would come less than a month after the BOJ caught markets off guard by widening its tolerance range for the 10-year Japanese government bond yield. So the BOJ, they have been engaged in yield curve control, which is the most ultra-dovish monetary policy imaginable. They have been saying we are going to peg our 10-year yield up until a few weeks ago at 0.25%, and they would print money and buy as many bonds as needed to maintain that peg. And then a few weeks ago, they surprised everybody when they raised that peg up to 0.5%. And that started really this cascade of events with private holders of Japanese government bonds dumping them. And the BOJ has been forced to buy increasingly larger amounts of these bonds to maintain even that higher peg at 0.5%. And a lot of people are theorizing they may ditch the peg altogether, which would send Japanese government yields a lot higher, but it would also send a lot of money flowing back into Japan. So this would cause a major dislocation in bond markets, including here in the States. Just to give you an idea of how bad this is, check out this paragraph here. Nikkei reported Monday that the Bank of Japan had purchased Japanese government bonds worth more than 2 trillion yen, or $15.6 billion, after the nation's 10-year bond yield curve topped 0.5%. So that was $15.5 billion in one trading day that Japan had to buy to maintain that curve. And they've been doing that almost every day for quite a while now. All right. So even the Federal Reserve, all through 2021, with their money printing. They call it quantitative easing and buying assets. They never printed money at the rate the BOJ is doing right now. And keep in mind, the Japanese economy is only a fraction the size of the U.S. economy. So this is central banks absolutely gone wild what's going on in Japan. And it's not sustainable. They can't keep this up for more than a few more days. So a lot of people think that Japan is either going to raise their peg, maybe to 0.75%, or ditch the peg altogether when they end their meeting on Wednesday. Now that could cause a couple of things. All right, first of all, it's going to send the US DXY lower if that happens. A lot of people will dump dollars and go back to the yen. And you can see on the DXY here, it's right now back at 101. The shrinking dollar, the DXY heading lower, has been one of the things that's been sending U.S. stocks a lot higher recently. So this Japanese news, at least on the surface, could be very bullish for U.S. stock prices, just from the effect on the currency. Now, there's an asterisk here, because the asterisk is a credit event. If what happens here causes a mass exodus of the dollar and even the euro, other currencies, and back into the yen, you could see a lot of selling in U.S. government bonds and in European government bonds. And sudden large selling in the bond market, especially now when liquidity in the bond market is low, that could cause a panic in bond markets, and it could send U.S. government yields sharply higher. And if those yields move sharply higher, we could have stress in the banking system. So it's going to be interesting what comes out of Japan over the next few days. I don't want to be all doomy and gloomy, but at least on the surface, DXY probably going to head lower on this news, but keep an eye out. If we see a sudden surge in borrowing costs, that's when things tend to break in the economy, and that would be a very, bad thing for you and I, to say the least. Other stories going on this morning. We have got Goldman Sachs reported their earnings, and it was rather doo-doo earnings from Goldman Sachs. They missed on their profit amid a steep decline in investment banking. Steep decline is putting it mildly, a 66% decline in investment banking from Goldman Sachs. Nobody wants to IPO. Nobody wants to do mergers and acquisitions right now, so a big investment bank like Goldman Sachs is on the receiving end of that. Their earnings came in at $3.32 a share versus $5.48 a share estimate, so a big miss from Goldman Sachs. Their stock right now down to 2.5%. So not a lot of good coming out of Goldman Sachs at the moment. But again, the big story is what is going on over in Japan. And I see a super chat from Mr. Mike Binder from Robin RC Models. Thank you, Mike. He says, good morning. Watch everyone turn bullish. Pump till April. I don't want to say bullish, Mike, because, I'm not known for my optimism. Again, right here on the sleeve, perma bear. But right now, if what Japan does send the Dixie sharply lower, stocks are denominated in dollars. The denominator gets lower. The nominal value goes higher. It's pretty simple math. I'm not optimistic about the economy. I think we are looking at a severe, steep, deep recession heading into, but that doesn't mean stocks can't rally first. It doesn't mean stocks can't go higher. Stocks do not equal economy. And despite a lot of really bad economic data, stocks continue to march higher. So we're going to keep an eye on that one. And let's see, because stocks were only marginally higher at the open, it looks like still pretty much flat. S&P down 2 points. Dow down 138 now, so heading a little bit lower. And the NASDAQ is down 28. So it looks like stocks are not all that optimistic at the moment, giving up. Well, they didn't really have any gains to give up. But thank you very much, Mike. Appreciate the super chat, sir, and the support of the channel. You are a gentleman and a scholar. And guys, with that, I think we are going to wrap it up this morning. So keep an eye on what comes out of Japan. We won't expect to hear from them until Wednesday, but it's all about the Dixie right now. I want to thank you guys for your time. Thank you, Mike, for the super chat. Thank you to my Patreon supporters. Hi, Mom. Hi, Dad. Thank you to my Blue Wrenches for keeping everything neat and tidy in the chat. And until next time, live small and dream big.